It is 9:40 a.m. Pacific Daylight Time. It is the 29th day of May 2026. This is a palindrome episode 1331 of Bitcoin, and Texas is going to start us out today. They're making a change in their Bitcoin reserve plan, and you're going to hear all about it here on the Bitcoin and podcast with me, your host, David Bennett, bringing you all the news you can use about Bitcoin and macro from around the world. And then at one point or another, we're going to go back to this anonymous plaintiff guy that is trying to get a hold of $293 billion worth of dormant Bitcoin. Bitcoin Magazine's got a better write-up. There's a little bit more detail as to what's going on. And I really do think this particular one is worth our time to take a second look at. Then Fidelity Digital Assets is, they've got a report that says that there may be a shift occurring from dollar-based systems. Then Treasury Secretary Bessent is going to finish up the first half of the show. Then in the second half, we're going to go right to Kalshi, who is holding hands with the CFTC while they bitch slap the state of Minnesota. And Sequans completely unwinds out of their Bitcoin treasury company status. Or at least that's the rumor. We'll find out a little bit more. And then somebody's worried about Strategy's stretch. So there's enough people that are bitching about where the price is on their stretch preferred right now. So we might as well talk about that. And then, will Anthropic release Claude Mythos? I don't know. It looks like they're signaling that the release is imminent. But before we do anything, President Trump seems to be indicating that he is going to make an imminent decision on Iran. Where have we heard this before? And markets are freaking screaming. The Dow itself is almost at an all-time high right now. And very clearly this morning, the S&P and the NASDAQ battled through all-time highs yet again. And DRAM is also sitting at an all-time high. That's that Round Hill chip ETF thing that I've been telling you about. Okay, let's go to Texas, where there's barbecue, college football. Oh, I guess I should mention that. My alma mater, Texas Tech. Okay, this is just this is kind of an interesting story, and it makes me ask a couple of questions. The head coach of University of Texas, UT, the Longhorns, sat down at a press conference sometime last week and basically said, without actually mentioning Texas Tech, he said there's a Texas school whose schedule, their football schedule for next year, is so easy that they could go undefeated if they played their second and third string teams. So, Cody Campbell, one of the boosters for Texas Tech, and seems to be very rich and whatnot, and head coach of Texas Tech got together and they made a little plan. And they called up Texas State University and some other school, and offered to buy them out of their first week games so that instead of Texas playing whoever we were going to play and University of Texas playing whoever they were going to play, Texas Tech called those two schools and said, we will buy you out for that first week so that Texas Tech can play University of Texas. I don't know what's going to happen, but the amount of publicity that Texas Tech is getting out of this is insane. And it's almost all for free. And the question that I have is this. Is it possible that Joey McGuire, the head coach of Texas Tech, and Skrinvinson, I can't pronounce the guy's name, head coach of UT. Is it possible that they're working a deal under the table together for free marketing? I don't know, man. It wouldn't surprise me, but Texas football and barbecue aside, Texas Bitcoin reserve plans shift from ETF to direct Bitcoin custody. Christina Comben has it for Cointelegraph. Texas is seeking a custody and liquidity provider to help move its strategic Bitcoin reserve, of which Texas has one, from BlackRock's iShares Bitcoin Trust Spot Bitcoin Exchange Traded Fund into directly held Bitcoin, according to a state procurement document. The move, which was posted back on May the 7th, but announced Thursday from the Texas Comptroller's office, would move Texas closer to directly held Bitcoin through a third-party custody arrangement rather than relying solely on ETF exposure, marking a shift from ETF exposure to direct on-chain ownership. Texas has allocated $10 million to the Strategic Bitcoin Reserve, which the state has used to buy iBit as an interim way to hold the funds before shifting to directly custodied Bitcoin, according to the request for proposals document. The Comptroller's office said the winning firm will be responsible for acquiring, holding, managing, and reporting the state's Bitcoin and any other qualifying cryptocurrency holdings, leaving the door open to assets beyond BTC over time. Yeah, I got to pause right there and say not very many. Actually, there's going to be only probably one other cryptocurrency currently that's going to be able to meet Texas's guidelines for what cryptocurrencies they hold. So any of you guys out there thinking that they're going to buy Doge, no, it's not going to fit the bill. Continuing on, the mandate covers secured custody of digital assets in the name of the state of Texas, liquidity services to facilitate purchases and sales, and a transition plan that would shift existing iBit holdings into directly custodied Bitcoin within 60 days of contract execution. The RFP goes beyond basic safekeeping, requiring institutional-grade security controls, standard and custom reporting, and a dedicated public website showing just how much Bitcoin and other qualifying cryptocurrencies the reserve holds and what they are worth. The request for proposals was highlighted in a statement from Acting Comptroller Kelly Hancock announcing the members of the Texas Strategic Bitcoin Reserve Advisory Committee. The panel includes veteran investment executive Laurie Dotter, CoreMint Data Systems founder and CEO Jamie McAvity, Southern Methodist University law professor and digital asset scholar Carla Reyes, as well as CleanSpark president and chief financial officer Gary Vecchiarelli. There's no way I'm pronouncing that name. The committee is tasked with advising on how the reserve is run, including custody arrangements, risk management, and how the state discloses its holdings and performance to lawmakers and the public, as well as broader governance of the reserve's investment strategy. Supporters of the law that created the reserve have pitched Bitcoin and potentially other large cap cryptocurrencies as a strategic asset to help hedge against inflation and blah, 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 blah. The only real thing here is that there's two things. Going from the iBit Bitcoin Trust directly to holding Bitcoin and doing it within 60 days of finding a custodian. So they're actually going to move pretty fast on this. It's a good move. It makes more sense to keep the Bitcoin instead of a representation of said Bitcoin. Now, UT, I don't know if anybody remembers this, a few years back, actually it's probably more than 15 years ago, something like that, UT repatriated all of the gold, and I can't remember where they were keeping it. I want to say they were keeping it in New York, but they repatriated all their gold directly to being held physically in Texas. So this is sort of the same thing. And it doesn't surprise me that a state as great as the state of Texas would actually be continuing on in this vein. Now, on to anonymous plaintiff seeking legal title to $293 billion in dormant Bitcoin without holding any private keys whatsoever. Micah Zimmerman, Bitcoin Magazine. A pseudonymous individual calling himself Noah Doe, along with 2 Wyoming LLCs, has filed a suit in New York Supreme Court seeking a court declaration that they are the legal owners of 39,069 dormant Bitcoin addresses holding roughly 3.8 million Bitcoin, worth an estimated $293 billion at current prices. The case, filed March the 11th, 2026, and then amended May the 1st, 2026, is believed to be the first attempt in United States history to claim title to Bitcoin under lost and found property statute. God. The legal vehicle is New York Personal Property Law Article 7B. It's a statute designed for tangible lost objects, like a wallet found on a sidewalk or jewelry left in a cab. The lawyer says a finder who reports lost property to police, makes reasonable efforts to locate the owner, and receives no response within a set period can eventually take legal title to the item. Noah Doe's complaint argues that dormant Bitcoin addresses are, quote, lost property under that framework, and that his USB drives of address data delivered to the NYPD 17th Precinct satisfy the deposit requirement, and that title to all 39,069 addresses vested in him across 3 dates: December 26, 2025, March 31st, 2026, and April the 14th, 2026. The statute has never been applied to cryptocurrency. Article 7B was written for physical objects that a finder picks up and hands to authorities. The plaintiff never held private keys to any of these addresses and could not have transferred the coins to the police or to any owner who came forward. The Bitcoin address, or a Bitcoin address, unlike a lost wallet, remains fully accessible to its original owner regardless of whether someone else has identified it. The coins do not move unless the true key holder signs a transaction. The 39,069 addresses named as defendants are not a random sample of dormant Bitcoin. According to blockchain research firm Galaxy Digital, which published a detailed analysis of the case in May 2026, roughly 21,923 of the defendant addresses carry what researchers call the Satoshi nonce pattern. It's an on-chain fingerprint widely attributed to Bitcoin pseudonymous creator Satoshi Nakamoto. Those addresses alone hold approximately 1.096 million BTC, worth $84.7 billion. Also on the defendant list, one address holding 79,957 Bitcoin stolen from the 2011 Mt. Gox hack, coins that have been actively tracked by investigators for over a decade. And one address that is a counterparty burn address, meaning it is provably unspendable and was never controlled by any person whatsoever at all. The Mt. Gox coins are the subject of ongoing recovery proceedings and are not, by any conventional definition, abandoned. The median defendant address holds 50 BTC, currently worth $3.86 million. The average holds 97.25 BTC, worth around $7.5 million. According to Galaxy's on-chain data, 99.9% of the defendant addresses hold Bitcoin worth considerably more than $10. And that $10 figure is central to the case's architecture. The complaint relies on an unnamed expert's opinion that each address was worth less than $10 as is at the time of finding, on the basis that recovering the contents is uncertain. That single valuation places all 39,069 addresses into Section 257, Part 2 of Article 7B, the statute's fastest track, which vests title in the finder just 1 year after the fine date with no multi-year police holding period required. The $10 figure is the legal linchpin of the lawsuit because it is the number the plaintiffs use to argue that the wallets qualify for New York's fastest property, or rather fastest lost property title path, even though the coins themselves are worth far more on the market. If the addresses were valued closer to their market prices, they would fall into the statute's top bracket, which carries a 3-year police holding requirement. The 1-year shortcut the complaint relies on would not be available. The complaint's 3 title vesting dates correspond exactly to the 3 found dates plus 1 year, a timeline that only works if the sub $10 valuation holds. The expert behind the valuation is not named, however, anywhere in the filings. The defendant addresses did not emerge from nowhere. Galaxy Research identified all but one of them in an October 2025 report on a blockchain dusting campaign, a practice where tiny amounts of BTC are sent to addresses, often to track wallet activity. Between June and July 2025, over 39,000 addresses received op return messages. That is a Bitcoin data field used to embed text. And they claimed the sender had taken constructive possession of the coins. Sounds like a setup. Galaxy's research shows those messages appeared to be groundwork for a legal abandonment claim. That report won Best Crypto Research for 2025 from the Association of Cryptocurrency Journalists and Researchers. Galaxy's May 2026 analysis traced the funding for both the 2025 dusting campaign and the 2026 court-ordered on-chain service to a single Bitcoin address, which Galaxy calls the bankroll address. The firm found that 99.6% of the 2025 dusting transactions were funded within 2 hops from that address, and the same address funded the 2026 service operation. Because the defendants are anonymous Bitcoin addresses, the court authorized alternative service under CPLR paragraph 308 part 5. Each address received a 546 Satoshi payment, roughly 4 cents, carrying an op return message linking to a website hosting the pleadings. Galaxy confirmed 98 batch transactions across Bitcoin blocks 950,000 to 950,576, reaching all 39,069 addresses between May 21st through the 22nd of 2026. Whether that constitutes adequate legal notice is an open question. On-chain service has a precedent in Ethereum cases where wallets are account-based and tokens dropped into an address tend to surface in wallet software. But Bitcoin operates differently. Wallets are built around unspent transaction outputs, and most Bitcoin wallet software does not display op return payloads at all. Many wallets filtering incoming dust transactions as spam by default. Crypto legal observers across the industry agree that even a complete plaintiff victory would not allow Noah Doe to move on a single coin. Why? Because without private keys, a court declaration confers no ability to transact on the Bitcoin network. The protocol does not recognize court orders. Only a valid cryptographic signature can move Bitcoin. The practical concern, as Galaxy and legal commentators have noted, is different. A court declaration could function as a cloud on title, a legal document the plaintiffs could present to a regulated exchange or custodian if any of the listed coins appeared at a centralized venue. Now that could trigger asset freezes and force original owners to surface and prove ownership, potentially at the cost of their anonymity. It is that leverage over regulated intermediaries rather than any ability to seize coins directly that gives the case a potential significance. Because the defendants are pseudonymous addresses that will not appear in court, a technical default is possible around late June 2026, approximately 30 days after service. A motion for default judgment would likely follow. The court retains discretion to hold a hearing before issuing a declaration of title, and legal observers note that the novelty of the theory and the scale of the claim are factors that tend to invite judicial scrutiny. So, two things. I'm scrolling back up here to find this one thing. I want to reread this. Unlike a lost wallet, a Bitcoin address remains fully accessible to its original owner regardless of whether someone else has identified it. So think of it this way. Let's say I'm on a New York subway and my wallet falls out of my back pocket, and when I stand up to exit the subway, I don't feel it, and it's just laying on the seat. Okay, and I'm gone. I've exited the subway, and the door's closed, and the train goes on, and somebody sits down and says, oh, look, it's a wallet. They physically pick up the wallet. They physically possess the wallet. Okay, that's in their hands. Right? That's one of the things that we need to note here. As opposed to, let's say that I'm on that same New York subway, but my wallet doesn't fully fall out of my back pocket. In fact, it is halfway in my back pocket when I stand up to exit the subway. But somebody sees that wallet, but they don't take it from me. My wallet, after they see it, let's say magically falls back into my back pocket because, I don't know, I shift my weight or something like that. They saw the wallet, but they never touched it. They never had possession of it. It was never technically lost. That's what's going on here. This guy saw these wallets, but cannot touch the wallets, cannot hold the wallets, and cannot, under this New York statute, turn the wallet into the police in a physical way. That's one of the things that's going on here is like, how would you like somebody to be able to just look at your car and say, that car's lost and now it's mine? See, this, I think really that's going to be the biggest sticking point in this case. Because if you think this case is going away, you're wrong. It's not. I know it doesn't matter. The guy can't move the Bitcoin. I get it. But there, like this article was saying, there is a significant issue. If for whatever reason, one of my wallets is one of the wallets listed, like it got dusted or whatever, and we'll get to that here in a second. It got dusted. Well, he can't move it, but if I were to move some of that Bitcoin over to, let's say, just Cash App, and Cash App goes, oh, it came from this wallet address, and then they freeze that fund. They don't allow me to sell it. They don't allow me to move it back off of Cash App or something like that, and they just basically freeze that UTXO. I've got a problem because I'm no longer in possession of that Bitcoin. See, that's why this is actually more of a significant case than people are making out to be. I don't really think that anything is going to become of it eventually. But in the meantime, while this shit is going on, this is a significant attack vector that nobody's really thought of before. And it's leveraging real world assets to commit that attack. In this case, the legal system in New York. So don't take this with a grain of salt, or rather, don't dismiss this out of hand. That's a better way of saying it. It doesn't mean, oh my God, we're all going to die. It's not that at all. It just means, that, how to say it? I got to give kudos to this guy. I think that's what I'm getting at, is that it's an inventive way to exploit the existing attack surface that is always present on top of everything. You want to minimize your attack surface, but you're never going to be able to completely get rid of an attack surface And I got to hand it to this guy for thinking out of the box. How can I screw with Bitcoin because I can't really do anything to the blockchain? I said, oh, I know, I can leverage this statute. And if I do it in this particular way, I can make it look like I found lost property and leverage the legal system to prove my point. Even if let's say that the guy has that this Joan Doe or whatever his name is, Juan Doe, has no intention whatsoever of actually taking the Bitcoin, but is doing the entire thing as sort of a white hacker kind of thing, saying we need to watch out for non-digital ways to access Bitcoin's existing attack surface. So I got to give it to this guy. However, that bringing it back to that dusting campaign that happened a couple of years ago, might it not be proven that this is sort of like an organized crime thing where it's like I set somebody up to be able to enact this second stage of a plan? That sounds like a conspiracy. It sounds premeditated. And it also is probably going to be a huge sticking point on this court case as to what is this an innocent, or rather let's say innocent. Is this an innocent try to get a hold of this Bitcoin, which he never will, simply by using this lost property claim? Or is it a premeditative attempt to defraud the people out of their Bitcoin? Because there is a huge difference between those two things. And it looks like to me that this is phase 2 of the dusting campaign. I had almost forgotten about that whole thing. But now it looks like that the dusting campaign was done on purpose so that they would be able to do this next stage. And that's premeditative. And I'm not sure that's really going to fly in court. But like I said, be aware, this shit is not going away. And it's also not anything to sneeze at. Now, on to Fidelity Digital Assets, highlighting growing evidence of a shift from the dollar-based systems. Woohoo! Cointelegraph. Who's writing it? None other than Vince Quill. Recent moves by the Iranian government to Bitcoin for oil tolls as gold overtakes U.S. dollar assets and global central bank reserves has signaled a shift away from dollar-based systems, according to crypto financial services company Fidelity Digital Investments. Tehran's acceptance of Bitcoin for oil shipments passing through the Strait of Hormuz represents the emergence of alternative settlement mechanisms, according to the company's just released, quote, 6 key trends shaping digital assets in 2026 report. Accepting Bitcoin for shipping toll payments is evidence that the biggest cryptocurrency could replace the US dollar as the global reserve currency because of its neutral, confiscation-resistant, and decentralized properties, according to supporters of Bitcoin. At the same time, central banks' demand for gold remains strong, despite its 20% decline from all-time highs of around $5,600 per ounce that was reached in January. The report said, quote, gold's performance and continued central bank demand are broadly aligned with our initial thesis, while the anticipated follow-on outperformance from Bitcoin has yet to materialize, end quote. In May of 2025, Iranian media reported that the government of Iran was considering a maritime shipping insurance model for oil vessels crossing the strait that would be payable in Bitcoin and settled at the speed of blockchain. Quote, under the Economy Ministry's plan, managing the strait through an insurance framework would enable the issuance of various marine insurance policies as well as certificates of financial responsibility, according to the state-run Fars news agency. In April of 2026, the Iranian government announced it would accept oil shipping tolls in Bitcoin, US dollar-pegged stablecoins, and Chinese yuan. Then, later that month, U.S. authorities froze $344 million in stablecoin linked to Iran's government and the Iranian Revolutionary Guard Corps. Despite the ability of officials to freeze and confiscate stablecoins, Tether's USDT dollar peg token continues to dominate oil shipping fees, according to Sam Lyman, the head of research at digital asset or advocacy organization Bitcoin Policy Institute. So it's really just digital Fidelity is basically just looking at central banks wanting gold and Iran wanting Bitcoin for oil and these insurance things for the passage of the Strait of Hormuz as enough evidence to say that the global economy may be shifting away from the US dollar. I don't buy it. I don't, not yet, not now, not today, maybe one of these days, and maybe even sooner than we think, but not today. Not today by a long shot. Okay, Circle P is open for business. It's where I bring plebs with goods and services just like you to plebs just like you who want to buy said goods and services. But you will be paying for it in Bitcoin, because if you're not selling in Bitcoin, you're not in the Circle P. And I got a new vendor today for you. It's not food, and it's more of a service. And this is Sagebrush Corporate Solutions. Bitcoiners understand self-custody, but sovereignty does not stop at the wallet. Your business structure matters too. Sagebrush Corporate Solutions in Cheyenne, Wyoming helps Bitcoiners form and maintain Wyoming companies with registered agent service, LLC and corporate formation, remote online notarization, apostle facilitation, templated documents, and proactive compliance reminders. They are Wyoming based, not a national filing factory, and they accept Bitcoin through their own BTC Pay server, including on-chain and Lightning payments. Go to sagebrushcs.com. That's sagebrushcs, all one word, .com, and use promo code BitcoinAnd for 10% off when you pay with Bitcoin. It's Sagebrush Corporate Solutions, people. So if you want to incorporate, you're gonna this is the people that you want to go to. They're the people that are going to do the filings. They're the people that are going to like cross all the I's and all the T's. And honestly, people think that, I need an LLC, but I just make, I make dog biscuits. I don't need an LLC. I mean, that's for like great big players, right? Wrong. If you are intending to do any kind of business whatsoever, especially companies that could incur liability, you want an LLC. That's a limited liability company. And I'm sure that they have other corporate structures as well, but LLC catches my mind because even back in my younger days when I was doing my own company that was more genetic engineering services, I had to form an LLC on that one, and we were very, very small. Tiny company. We weren't a great big corporation, and even we needed to incorporate, and we incorporated in Delaware. Well, hell, I should have just incorporated in Wyoming, but I didn't know it was possible. But now it is with Sagebrush Corporate Solutions. Go to sagebrushcs.com. That's sagebrushcs.com. Get your filings done by people who know how to do it. All right? Use Bitcoin and for 10% off, and tell them it tells them that I made a sale for them here on the Circle P. Now, on to this one. Treasury Secretary Scott Bessent reiterates no CBDC commitment under Trump administration. Danny Park writes for The Block. U.S. Treasury Secretary Scott Bessent reiterated that the current administration will not allow a central bank digital currency during a White House press briefing on Thursday. Bessent said CBDCs are clearly off the table and reaffirmed the Donald Trump administration's focus on making the U.S. a hub for digital assets. Quote, "This administration has been very clear. There will be no central bank digital currency, which I think would be the first step towards tracking. I just lost my place. Hold on for the first step. Tracking. So we have taken all of that off of the table. the most important thing we could do is make digital assets come into the United States. All right, so Bessent also mentioned that the Genius stablecoin legislation passed with bipartisan support, and the Clarity Act is gaining similar legislative momentum. Quote, when you look at digital assets, all the nonsense that happens, all the things you read about, that's because it's the wild, wild west offshore, so we have to bring it onshore. So I would encourage the House and the Senate to get Clarity done. End quote. Bessent previously said during his nomination hearing in January 2025 that he sees no reason for a CBDC, adding that it is for countries that have no other investment alternatives. Multiple Republican lawmakers have also opposed the idea, arguing that it could open the door to government surveillance of people's transactions. Meanwhile, the Clarity Act, which aims to establish rules for the digital asset sector, passed the Senate Banking Committee earlier this month after multiple delays stemming from debates between U.S. banking lobby groups and crypto advocates. Analysts still view the Clarity Act as far from the finish line. Jarrett Seberg, managing director at TD Cowen's Washington Research Group, said in a note earlier this week that the bill would need conflicts of interest standards applying to the U.S. president to gain enough Democratic support to pass. Yeah, that's not going to happen. I mean, I don't know if it may pass regardless, but I don't see anybody chomping at the bit to get the Trump administration to stop making unforced errors. Just stop. I just don't think it's worth it to Trump to continue to say, no, we get to do this. We get to have, like while I'm president, my family is going to apply for a banking charter. And the very people that are going to approve that charter are basically kind of directly under my own purview. I'm sorry. It's not that I don't hate Trump. I promise you. Right? I know every time you say something at all about whatever dear leader the United States has that is not all about how good the dear leader is, it generally results in basically getting mudslinged at you. At this particular point of time, ladies and gentlemen, I don't give a crap. It's unethical what Trump is doing with his family. That is not a judgment call. That is a fact. And he doesn't need to do it. They absolutely do not need to do this thing. These are unforced errors. It's at one point or another, I fear, especially if it's as bad as I think it might be in the midterm elections, I think we might be looking at impeachment shit again, which I don't want to do. I mean, it's like the Democrats are literally being given truckloads of ammunition to fire at this guy, and he just seems to not give a shit. And it's not that I don't want him in trouble. It's not that I do want him in trouble. What I don't want is any more distractions, because it's going to be a huge distraction, and we don't need any more distractions. What we do need to do is run the numbers. CNBC, Futures and Commodities. It's very clear that everybody thinks that this is it for the Iran conflict. We're almost done, ladies and gentlemen. I can tell because Murban crude is down 1.7% to $92.05. Brent North Sea is down almost 2% to $91.90. And oil, West Texas Intermediate oil that is down 2 1/3. Back you go, you little shit, to $86.81. But natural gas, acting as the hedge, up a mere 1 1/5 point today to $3.32 per thousand. Gasoline down 2.75% to just over $3 a barrel. Okay. The CEO of Chevron Exxon or Chevron Mobil, or I don't know, whatever, the huge oil producer, and the CEO, I can't remember his name, people listen to him because he's, the head of one of the largest oil companies on planet Earth. Here's what he's saying. This shit isn't over, and he's not talking about Iran. What he's saying is that Iran could be over today. And if it was, it still wouldn't make any difference, because somewhere in the middle of June into July, we're going to see the second phase of what it meant to have the Strait of Hormuz closed. He's looking for a base price of $84 to $87 a barrel on Brent North Sea. What does that mean? Well, before all this nonsense started, West Texas Intermediate was trading at around $62 a barrel. And Brent North Sea, right around 67, 68, maybe briefly every once in a while into the very low 70s, like $70.10 a barrel. He's talking about a new baseline price for the foreseeable future of $84 on Brent North Sea. Not 70, not 67, $84 to $87. And his language kind of reflects that he kind of thinks that oil has been repriced. And I've kind of been having a gut feeling that we may have seen a complete repricing of oil pretty much from now on. I'm happy to be wrong about that. I don't mind, but I don't know, man. I don't think we're seeing West Texas Intermediate at $62 to $63 a barrel anytime soon, and I don't think we're ever going to see it again. Again, happy to be wrong, but it's a gut feeling. Metals are mixed today. Palladium down 1 1/3, gold up 1 1/3 to $45.95 6 dimes. Platinum is inching sideways. Silver is also inching sideways at $75.96 an ounce. Copper is down 2/3 of a point. And then there's ag, which is all in the red except for sugar. It is in the green by 1 percentage point. Biggest loser today is chocolate, 4.68% to the downside. Live cattle down over 0.5 point. Lean hogs down over 2 points. And feeder cattle down just over a point. Again, new all-time highs all the way around. S&P is up 1/4 point. NASDAQ is up 1/3 of a point. And Dow is up 0.56% to 51,025. So we're not sitting at all-time highs exactly right now. A couple of hours ago, yeah, it was. And then there's Bitcoin, which has now finally gotten back above 73,000. It's 74,200. It's a $1.49 trillion market cap, and we can only purchase 16.3 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,036,004.28 of. Average fees per block are normal. Looks to be about 48 blocks carrying 115,000 unconfirmed transactions waiting to clear at high priority rates of 2 sats per VByte. Low priority will get you in at 0.9. And we're still in zettahash territory on the Bitcoin network hash rate, 1.02 zettahashes per second to be exact on a 1 week average. I'm totally fine with it. Now, mind the CME gap, which was yesterday's episode of Bitcoin, and I've got a huge boost. And I don't know why I didn't see it on Fountain, so I had to go over to my helipad, which I keep on my Start9 node, which runs my Bitcoin node and my Lightning Network node, to find this 33,333 sat boost from user 32889652, which just means that the username wasn't resolved. I don't know who sent this to me. I really wish I knew who sent this to me because, man, dude, thank you. I appreciate it. And the boost says, man, you deserve more boosts. I appreciate your commitment to bringing us the most important Bitcoin-related news almost every weekday. Yeah, almost is right. There are some days that I have to skip. Let's see here. For who else? Nick Dose, 222 sats says, cheers. Right back at you, pal. And Noster Gang with 101 sats says, thank you. No, thank you, sir. And this is a reminder to go to bitcoinandshow.com. That's bitcoinandshow.com. It's my website. I try to publish like a brief synopsis of the day's show plus a link to the actual podcast itself and a few other tidbits. So if you would go to bitcoinandshow.com, give me a little bit of traffic over there so Google Analytics will pick it up and make me famous. That's the weather report. Welcome to part 2 of the news that you could use. Kalshi follows CFTC in suing Minnesota over law criminalizing prediction markets. Oliver Acuna writing this one for CoinDesk. Prediction market Kalshi filed a federal lawsuit against a Minnesota bill to criminalize operating, hosting, or promoting such a platform in the state starting August the 1st. The filing follows a motion which was filed by the CFTC, the Commodity Futures Trading Commission. They did that on May the 19th, the day after the law was signed by Governor Tim Walz, arguing that the legislation violates the U.S. Constitution by criminalizing at the state level the operation of prediction markets, which are governed by federal regulators. In its own filing, Kalshi claimed that the law violates the Supremacy Clause of the Constitution, which says the Federal Commodity Exchange Act grants the CFTC exclusive jurisdiction over derivatives and swaps traded on designated contract markets. The platform also challenged a provision that criminalizes the marketing or advertising of prediction markets, saying it violates the First Amendment of the Constitution. On Wednesday, U.S. President Donald Trump said it was critically important for the CFTC to maintain sole authority over prediction markets, echoing CFTC Chair Michael Selig. Kalshi has recently won similar preliminary injunctions against enforcement attempts in New Jersey as well as Arizona. So that's all we need from that one. That's all we need is that Kalshi is basically saying, yeah, you're screwing up the Supremacy Clause by doing this. But my take on it is this. And it's not that I hate Kalshi or Polymarket. I don't think gambling is good for the soul, but be that as it may, let's leave that cat outside for now. Right? If the federal government can just name something as under our exclusive control, and it's not specifically mentioned in the Constitution of the United States, and now it's governed by the Supremacy Clause of the Constitution of the United States. So let's say the federal government decides, you know what? Fence posts. All fence posts are now basically regulated by the United States government. And unless you want to violate the Supremacy Clause, you better not, in your state, put fence posts anywhere that we say, or without asking us first. You know, that means like every landowner wouldn't be able to go move a fence if they needed to go move the fence, simply because the federal government says that it's our exclusive domain. So therefore it's protected by supremacy. Okay. Yeah, see, this shit doesn't work for me. And I'm not in the camp that Kalshi and Polymarket should be able to operate, everywhere and be protected by the federal government. I'm not saying that. I'm not for or against this at all. I know that's confusing because I'm kind of confused myself. I think I worked myself into a corner on that verbiage. Let me try to do it this way. I'm not as concerned with Kalshi and Polymarket, which I think are gambling sites. I'm more concerned with the federal government just being able to say, this is ours, so therefore the states can no longer do anything that they want to about this particular thing that is now exclusively our domain. The 10th Amendment basically says this. If it's not mentioned in the body of the Constitution of the United States, then it's up to the states to decide. But if the federal government can just pick something and say, well, now that's our exclusive domain, so it falls under Supremacy Clause, then that's taking the teeth out of the 10th Amendment. And if it goes too far, we've got problems. Right now, not a problem. I don't give a shit. I literally don't care. If you want to gamble, that's your business. I don't think you should, but it's your business, and I got nothing to say about it. But if it gets too radicalized, it's almost as if, think about executive orders, presidential executive orders. Barack Obama pretty much started off by issuing more executive orders than any president had before him. And then Trump came in and he issued even more. And then Biden came in, and I don't think he issued as much as Trump on his first administration, but he issued a ton. What happened was they basically made the presidential executive order thing kind of stupid. You know, where it's like, oh, we'll just EO it. We'll just EO it. You know, it used to be like, it used to have some respect. Now I don't think the executive order stuff has as much respect because it's just completely overused. Now take that situation and apply it to the federal government, basically saying that is ours, and that is ours, and that is ours, and that is ours, and that is ours. So therefore, the 10th Amendment can't apply because we're going to do whatever the fuck we want to do in your state, and you got shit to say about it, whether it was written in the Constitution or not. Because now it is under the Supremacy Clause because we disclaimed ownership on it. This is not the way the Constitution was supposed to work. I could talk about it for an hour. I'm not. Let's go to Sequans. Sequans completes Bitcoin unwind, exits digital asset strategy after less than 1 year. They couldn't hold on. Micah Zimmerman, Bitcoin Magazine. Sequans Communications, the Paris-based cellular IoT semiconductor company, has completed the full redemption of its remaining convertible debt funded by the sale of a portion of its Bitcoin holdings, bringing short-lived and costly digital asset treasury experiment to a close. The company now holds approximately 658 Bitcoin, described as fully unencumbered, following the retirement of all convertible notes issued in July of 2025. Sequans said it plans to monetize the remaining Bitcoin over time, though it didn't specify a timeline or a method. Basically, they didn't tell anybody what that means. What do you mean monetize the remaining Bitcoin over time? I have no idea what they're talking about. But the retreat caps a strategy that began June 2025 when Sequans announced plans to raise $385 million through debt and equity to start a Bitcoin treasury. By late July, CEO Georges Karam described Bitcoin as a long-term store of value for our shareholders, with a target of accumulating 3,000 Bitcoin within weeks. The company crossed that threshold by month's end. But the unwind began in November 2025 after Bitcoin fell from an all-time high of above $126,000 to roughly $80,000. Sequans then sold 970 Bitcoin that month, followed by 125 Bitcoin in February of 2026 and another 1,025 Bitcoin during the first quarter. I don't know what they're talking about because February is part of the first quarter. Oh, well, it doesn't matter. Anyway, their holdings have got reduced to 1,114 Bitcoin as of April the 30th. Thursday's announcement confirmed a further reduction to 658 Bitcoin, reflecting a total sales of more than 80% of their peak holdings. Investors who bought shares at the height of Bitcoin enthusiasm last July are sitting on losses of more than 90%. SQNS, the ticker symbol for Sequans, shares rose 10% on Thursday following the announcement. With the debt retired, Sequans transitions to what it calls a nearly debt-free balance sheet, giving the company greater financial flexibility heading into the second half of 2026. The move eliminates collateral obligations tied to Bitcoin's price volatility, a risk that management had flagged in prior filings. Quote, "We have strengthened our balance sheet, simplified our capital structure, and are now fully focused on scaling our IoT semiconductor business," Karam said in a Thursday's statement. I can only assume here, pausing, I can only assume that IoT semiconductor means Internet of Things semiconductor. And I'm honestly kind of left slack-jawed that people are still talking about Internet of Things, but I may be wrong about that. Sequans' renewed focus centers on its 4G LTE-M and Cat1 BIS chipsets, which serve markets including smart metering, asset tracking, telematics, security, and industrial IoT. So yes, it is Internet of Things. The company is also advancing its 5G eRedCap platform, a next-generation cellular IoT standard, as a long-term growth driver. Okay, so what it sounds like to me is that they got all caught up in the nonsense of becoming a Bitcoin treasury company, and are now refocused on their core competency. I actually don't think this is a bad idea, except the whole Internet of Things crap is for me is kind of crap. But whatever. Going back to your core competency is not a bad play, especially for the smaller Bitcoin treasury companies. I told you this shit was going to happen. It was going to be the small guys. And, I'm not saying that strategy won't completely fail, but I am saying that they're less likely to fail because they got a hell of a lot more momentum than somebody like Sequans did. And there was a whole host of me too moments in the jumping on the Bitcoin treasury strategy bandwagon. And as I predicted, some of them are getting off that bandwagon because they just couldn't hold on to the bumpy ride. Think of a small child sitting on the very last bale of hay on the hay ride on a wild tractor ride through some kind of uneven country, because that's sort of what we're doing. That little kid's going to get bounced off and end up in a ditch on the side of the road, and that's exactly what it looks like happened to Sequans. But at least they actually have a core competency to fall back on. Been watching Nakamoto this morning as David Bailey literally buys $1 million worth of stock and got it to pump by 18%. After yesterday, it being lower than humanly possible, or at least beyond human expectations. And yet somehow, here's David Bailey without a whole lot of core competencies. I mean, there's Bitcoin Magazine, there's a Bitcoin conference, but given their balance sheet, it doesn't look like that makes them a lot of money. And outside of that, I don't know what Nakamoto's core competency is. So he better hope that his huge purchases of his own stock at these prices, which was funded, by the way, he's got that money because he got a lot of money before all this stock started basically cratering down to hell. And he's using that money now to try to get it back up. And we'll see if anybody takes the bait. I don't know. But speaking of strategies STRC slips below $99 as Strive captures investor attention. So it looks like it's a battle. CoinDesk, James Van Straten writing. Strategy's perpetual preferred security stretch fell as low as $97.11 on Thursday as Bitcoin slipped to the $73,000 mark. STRC tends to face selling pressure during Bitcoin drawdowns and in the days immediately following its ex-dividend date, as seen on November 20th and February the 5th. The ex-dividend effect typically results in a price adjustment reflecting the value of the dividend, while periods of Bitcoin weakness can reduce investor appetite for strategy-related securities. Together, these factors have historically created short-term pressure on STRC's market price. The company has structured STRC to trade near $100 par value, as maintaining that level enables strategy to continue issuing shares through its at-the-market program and raise additional capital efficiently. Strategy repurchased $1.5 billion of its 0% convertible senior notes due 2029 recently, reducing its overall debt burden. However, the buyback was funded using cash from the company's US dollar reserve. Strategy's cash balance declined from approximately $2.25 billion to $871 million as a result. Based on the company's current annual preferred dividend obligations of roughly $1.7 billion, the remaining cash reserve now provides only about 6 months of coverage, but was initially implemented to cover the dividend obligations for 24 months. Executive Chairman Michael Saylor discussed several potential sources of capital that could be used to meet dividend obligations and support the balance sheet in a recent interview with CoinDesk senior analyst James Van Straten. These include selling Bitcoin, issuing additional MSTR equity when the stock trades above a 1.22x multiple to net asset value, or raising capital through STRC issuance. Saylor emphasized that management evaluates these decisions through the lens of Bitcoin per share, prioritizing actions that are accretive to shareholders. Competing Bitcoin treasury company Strive Asset Management, or ASST, has taken a different approach. The company recently announced daily dividend payments for its perpetual preferred security, SATA. For the past 2 weeks, SATA has remained tightly anchored around its $100 par value while offering a dividend yield of approximately 13% even during Bitcoin's decline. Although the daily dividend mechanism has not yet been implemented, investors may view it as a stabilizing feature that helps keep the security trading close to par. Strive also eliminated all debt inherited through its acquisition of Similar Scientific, a balance sheet strategy that mirrors the direction Strategy appears to be pursuing through its recent debt repurchasing. The market performance gap between the two companies has been notable. Over the past 3 months, Strive shares have gained approximately 110% compared with 12% rise in MSTR and an 8% increase in Bitcoin. This divergence suggests investors may be rewarding Strive's cleaner balance sheet and higher yielding preferred structure. Yeah, that's the end of the article, but I don't know. I mean, until they actually start doing a daily dividend payout, we don't know what this is going to look like. We know what it looks like right now, which is looks like it's based upon investor speculation and expectations. But when the rubber meets the road, that's when you'll know if it's got traction or not. And I'm still skeptical. Daily dividend payouts? How the hell do you even, I don't know. Look, all this is stupid. Just buy Bitcoin and hold the Bitcoin. Wrapping all this Rube Goldberg machinery around Bitcoin is completely unnecessary and hides the true beauty of what the hell we were trying to do in the first damn place. Just buy Bitcoin, hold Bitcoin, and if you're one of the people out there that says, well, you also got to spend your Bitcoin, then do that too. Just continuously buy more Bitcoin. Whatever it is that you're doing to get fiat income, convert it to Bitcoin and use it appropriately. Strive, ASST, SATA, MicroStrategy, MSTR. These are all wrappers. You know, and a wrapper is kind of supposed to protect the product inside the wrapper. All right? You know, my favorite wrappers are clear cellophane, so you can actually see the product. Here, we don't get that. What we've got is a product wrapped in freaking corrugated cardboard. I can't see anything inside of it. That's why I don't touch any of this crap. Just buy Bitcoin, hold Bitcoin. Last up, Anthropic. Anthropic's Claude Mythos AI model nearing release after raising cybersecurity alarms. This is out of Decrypt. Let's just hit the high points here. Anthropic said Thursday that it expects to expand access to its Claude Mythos AI models in the coming weeks, signaling that the company may soon move beyond the tightly restricted rollout surrounding the cybersecurity-focused system. Quote, we're making swift progress on developing these safeguards and expect to be able to bring Mythos class models to all of our customers in the coming weeks. And by the way, they also dropped Opus 4.8 model. So if you're wondering about that, that's the thing. Now this Claude Mythos model that everybody is terrified of, now they're talking about guardrailing it so that they can release it to the public. And I suppose that guardrailing simply means that they're not going to allow, they're going to have I think what's going to happen is that they're going to have two different kinds of Claude Mythos. They're going to have the Claude Mythos that can find all the vulnerabilities and all the software systems around the world, and they're going to let their friends have that. The plebs aren't going to be able to do that shit. It's going to be the Mythos model, all right. But again, there's going to be a wrapper that obfuscates the power that Anthropic was saying that the Claude Mythos had, which we found out about like last month or late the month before. I can't remember when they talked about how devastating it would be if they released that model today. Oh my God, we're all going to die. So just a word to the wise, Claude Mythos is coming out, but it's going to have training wheels on it. So just be aware. All right. So that is it for today. Episode 1331 is in the bag. I hope you guys have a really, really great weekend. It's beautiful where I'm at. Really pretty sunny days, good temperature, really, really nice. So go touch grass, and I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.